Hello, Conrad. Great to see you. Thanks a lot for taking time to discuss our financial performance. So before talking about the full year results, Conrad, we're all wondering how the year ended. What can you tell us about the fourth quarter?
Yeah, good morning, Kai. The fourth quarter ended really well for us. What stands out is the step up in profitability, another 240 basis points improvement in our EBITDA margins. What for me also stands out is the growth in Catalyst and the overall growth of 1% in local currency for the company.
So it was a strong year end. That also explains the full year result, because I think what really stands out is a 180 basis point step up of the EBITDA margin in the full year 2025. Conrad, I'm pretty sure you're happy about the result, aren't you?
Yeah, we're happy with another year of profitability improvement. I also would like to note that this marks the third year in a row where the company improved profitability in EBITDA margins, but also in absolute EBITDA. I think that really stands out in an environment that remains quite challenging for the chemical industry. I think we know the levers. It is a repositioning of the business towards the more profitable and attractive segments. It is the successful delivery of our cost improvement programs, and it is also our pricing. So we are able as a company in an environment where there is inflation to pass on these costs to our customers because of the value that we deliver with our products.
Absolutely. So you mentioned the drivers behind it. Talking about top line, so it's a bit of a mixed picture. Can you highlight what you think stands out in terms of our sales development last year?
Yeah, if you look at the sales development last year, overall it is flat, but there were quite some moving parts underneath. I mentioned already the repositioning. We were very pleased to see the growth in our personal care, home care business. We are pleased to see the growth with our Ag Solutions business. We also saw actually nice growth in our mining business, which very much was based on market share gains. Very well done by the team. We were pleased with the growth actually in Catalyst in some of the segments like syngas and ethylene. And last but not least, there's a true turnaround in the additive business where we're also back to growth again.
Yeah, since you just said it was not a one-time effect, what we saw last year, but consequent of year-by-year improvements. Let's talk a little bit about this strategy, because some years ago we launched our purpose-led growth strategy, which aims not only at financial performance, but also at leading positions in non-financial performance. Which of these non-financial KPIs stand out and how have we done here so far?
Now, I'm very glad that you mentioned this, Kai. Back in 2021, we launched our purpose-led growth strategy, and we emphasized it's not only about financial targets in this company. The non-financial targets are actually very important. And we did see year-on-year improvement in these non-financial targets and objectives. And what I'm very pleased is that the company has now achieved top quartile performance in our safety numbers. So we are amongst the safest companies in the chemical industry. I'm also very pleased that we have achieved top quartile employee engagement right now. So we are actually amongst the companies with the highest engagement level in our amongst our employees in the industrial sector. And finally, very important, customer satisfaction. We made step changes in our customer satisfaction levels. And now if you look at our customer NPS score, our customers net promoter score, we went up from 45 to 50 last year. Now also we are in top quartile when it comes to customer satisfaction.
Oh, that's impressive. So the Clariant teams have really delivered and done a great job. I think we can say that. Now there's another field also talking about non-financial performance, which is a bit under pressure. I'm talking about sustainability because we're seeing some headwinds. Some people even call it a backlash, talking about politics mainly. What is your assessment? Do we still stick to our strategy to focus on sustainability? And what does this all mean for our business?
Yeah, we absolutely stick to our strategy. This is an integral part of our purpose-led growth strategy. It is all about delivering growth based on solutions that we provide our customers that make our customers more sustainable. What we see for Clariant, sustainability is not driving our cost up. It is actually driving our margins up, and it is actually one of the key drivers for organic growth. Increasingly, we see that customers are willing to pay for low carbon products. With our climate tool, we now can provide the exact carbon footprint on all of our products. And what we see, particularly in the consumer-facing segments, is that customers prefer these products and are actually willing to pay premiums for it. So for us, sustainability targets are there to stay, as they are a key part of driving our organic growth.
So we're not looking at these headwinds more from the political side, but more tailwinds from consumer side, customer trends that are here to stay. Conrad, talking about these customer trends, or a general trend that I think everybody's talking about these days, as you may imagine, I'm talking about artificial intelligence. What does it mean for Clariant, and how are we positioned in this field?
Yeah, AI is fundamentally changing the way we run our business. We were very pleased to see the outcome of a recent benchmark in Germany amongst chemical and pharma companies, where Clariant came out as #1 in AI adoption rates. We have actually a very significant number of use cases up and running. The most excited ones I find are the ones where also our customers are directly benefiting. I like to mention here Clarity, which is an AI-supported tool for our Catalyst customers, where Catalyst customers can see how the performance of their plants stacks up with the performance of their competitors on an anonymous basis. And actually, they receive recommendations from Clarity how to improve their operations. There's a lot of data crunching happening here, and AI generates these recommendations. We have now more than 800 users signed up for this, more than 220 plants globally in 38 countries.
That to a certain extent also explains the customer satisfaction, as you said before, which has gone up. So one great example, I think, how we're interacting in a different manner with customers. Now, Conrad, of course, we also want to talk a little bit about the future now. Before doing that, let's look at the general market environment, GDP growth, but mainly, of course, what's happening in our industry, chemical industry and chemical markets. Maybe you can say a few words about how you assess the situation here.
Yeah, if you look at the chemical markets globally, the outlooks for this year are actually that growth rates will come down, primarily because of a slowdown in China, but also in the US, challenging markets right now, and production rates may even turn negative in the course of this year. So the recovery in chemical markets, it is not happening yet this year. Now, on a positive note, at some point, consumers will have to shift back their spending to durable goods. There is a natural replacement cycle for products, and people anticipate quite widely in our industry right now that this recovery will come in 2027.
So 26, we can say year of transition, bottoming out, and then the positive outlook. How does that translate specifically into our guidance for 26 and then also for 27?
Yeah, our guidance for 26, we're guiding for around flat top-line growth. Underlying, that means there's some growth because we will offset then the effect, which is roughly 1% of our top line, of pruning actions that we did last year. So around flat top-line growth, and then actually another step up in profitability towards around 18% EBITDA margins. And finally, we expect a cash conversion, so a conversion from EBITDA to cash of at least 40%.
Well, not so much about 2026. Now talking about 2027, because this will be the year when we're set to achieve our midterm targets. What can you tell us about that?
Yeah, regarding our midterm targets, Kai, we expect a further improvement in our profitability. We also expect a further improvement in our growth, building on the recovery scenario that is out there for the chemical industry in 2027. So we are expecting to outgrow our markets. At the time, back in 2021, we projected a 4 to 6% growth. But it is important to note that this was assuming a 2 to 4% growth in overall chemicals markets. So it does assume, indeed, a pickup in chemical growth rates. Finally, cash conversion, 40% is what we set back in 2021. We are already at that level, and we expect to continue to operate at a level at least 40% conversion from EBITDA to cash.
Well, Conrad, thanks a lot. I appreciate your time once again. It was great talking to you. So have a good day and see you soon. Bye-bye.
Thank you.